Alright, welcome back to Callistofx. So, this is going to be the first installment of a new series called The Only ICT Concepts You Need to Know. We want to streamline the ICT learning process and make maneuvering through this complicated and rather confusing style of trading and make it as simple and easy as possible. So, for this episode, we will be talking about order blocks. So first things first, what are order blocks, right? In the name is just an order block. So what are they? So an order block, in this case a bullish order block, will be a candle or group of candles with a down close that has the most range between the candle open and close and is near a level of support. How do we know order blocks are valid? When the high of the lowest down close candle is traded through by a later formed candle. And why do order blocks form? Institutions have such large orders that they cannot possibly sell or buy like you and I, right? They have to buy when they are willing sellers and sell when they are willing buyers. So this would be my logic, right? It might not necessarily work for you, but this is what works for me. Imagine you are an institution and you put hundreds and thousands of orders into the market. You will not be able to place all of these orders at one time. So you have to wait for price to dip down, right? Where there is an indication of willing sellers at a certain price. And then you will be able to buy at that point. And only then can you capitalize on the real move towards the upside. And then after that, we'll be talking about how we can trade using order blocks and where we place our stop loss when we use order blocks to trade. Okay, now let's talk about how we can use order blocks to trade. So number one, it has to be at a support or resistance area. Number two, the order block has to be valid. Number three, we have to wait for price to retest the area of the order block. And number four will be main threshold, which I will touch on later. So let's take a look at this example. So right here, you can see we have a level of support, right? We have these relatively equal lows over here. So this would be coming off a level of support. Next, validity of the order block. So how to determine whether an order block is valid? As we discussed earlier, when the high of the lowest down close candle, right, is traded through by a later formed candle. So in this case, we'll be focusing on this group of candles right here. So when the high of this candle got traded through, this would mean that this is a valid order block. Okay, so how do we then use this order block to our advantage to trade? We have to wait for the retest of the order block. So if I were to mark out this order block over here, we can see that price has come down to retest this. And when price comes down to retest it, we go for a long position here, right, with our stop loss below this swing low or the order block low. And we target these highs over here, these relative equal highs. This would net us a nice 1:3.45 risk to reward ratio, having a nice trade over here. Okay, of course, you wouldn't know that price will continue to rally up in hindsight, but this is just one example of how you would be able to use bullish order blocks to trade. Next, let's look at a bearish example. So take everything I said about a bullish order block and flip it, right? So instead of being at a support area, we'll be looking for areas of resistance, and instead of it being a down close candle, we'll be looking at up close candles. So right here, we have a nice resistance zone over here, right? We have a lot of rejections from the candles at this area. So that's our first thing checked off. Next, validity. We need the low of this bearish order block to be traded through by a later form candle. So right here, we have this low of this bearish order block, and it has been traded through by this candle. So we will now be focusing on this order block over here. So I will now mark out this order block and extend it right towards the right, and we can see that we can use this order block itself to trade, right? Short position at the low, at the close of this order block, stop loss above the swing high or the high of the order block, and we'll be targeting this bullish order block towards the left. So if you can tell, right, these would be your premium and discount arrays, which we will get into, right, in the further series of the videos. But we can use different order blocks or different premium and discount arrays as our targets as well. This would net you a nice 1:almost 5 trade. Okay, so now I'd like to touch on the last point, mean threshold. So this is very closely related to how we know an order block is most likely to hold. So actually, there are two scenarios. One would be a respect of the mean threshold, and two would be an overlapping PDA. So let's talk about mean threshold first. We'll be using this order block as an example, right? And what the mean threshold is basically the 50% level of an order block. So we're going to be focusing on the order block candle body, right? And we're going to be extending this out with our Fibonacci tool. So the middle line would be the 50% level. What do I mean by respect of the order block mean threshold? It will mean that there is no candle closure below the 50% level. So if we look at this order block over here, we can already see that right here we have a wick into our 50% level, almost violating the order block. But this order block is holding because why? Its mean threshold has not been disrespected yet. That is just one of the factors. Okay, next, it will be an overlapping PDA. What does that mean? It is just a premium or discount array that is overlapping with the order block. In this case, we are looking for discount arrays overlapping with this order block, and that would be this fair value gap right here. That is very nicely overlapping with this. So I'll extend these out, and as you can see, because of this strong quote-unquote level of support, right, because these overlapping PD arrays, we see price reject off this level several times, and it will continue to hold until we see a nice upward movement. Okay, so what did we go through today? So we went through what order blocks are, right? How we know order blocks are valid, why do order blocks form, and how we use them to trade. We also went through how we know an order block is most likely to hold. Now, to touch on the last point, do we know for sure that these order blocks are going to hold with either A, the mean threshold not being disrespected, or B, an overlapping PD array? No. But if these factors line up, we will be having a very high probability of order blocks holding. And that's what trading is. Trading is simply a game of probabilities, and it's your job as a trader to put yourself in the best possible position with the best possible probabilities on your side before you enter the markets. So that'll be it for this video. If you enjoyed the content, please be sure to like and subscribe, and I'll see you guys in the next one.